Yo, what's going on, everyone? Got an amazing trade review for you all today. What we're going to look over is a trade on QQQ that I took, and what's so good about it is that it showcases how powerful and important it is to recognize liquidity levels, manipulation, and displacement all on this chart. So what I have is a trade recap, and I went back in time from when I actually took the trade, and this trade actually went all the way to over 300%, which is insane. So if you like these kind of trade recaps and this kind of content, remember to leave a like, comment, subscribe, and then let's get right into it. All right, so one of the biggest things I like to look at is what the liquidity sweeps were in the pre-market. So if we look back at the Asia session, we have a Asia high right here. We also have a London high right here that did not take out Asia. But when we finally got into the market around the AM session of New York, we did take out that high, but we displaced down, and that's all good. All right, this created a liquidity sweep, so that means when we take out the highs, where are we going to go? We're going to go down to the lows, right? So we had a 4-hour external range liquidity level all the way down here. This was at 21,098, so that would be the final target, right? At least the near-term target. We had a large bearish 4-hour fair value gap up here. So if I go to 4-hour, I can do that, and we see the 4-hour right here. And at the same time, we have a very large bullish fair value gap down here. So we have different liquidity levels, right? We have our previous 4-hour external range liquidity, which is right here that we mentioned at 21,098. Then we have anywhere in here, ideally the consequent encroachment, which is our halfway point of that fair value gap, but ideally even further down here. But just because we are in the upper quadrant of the fair value gap does not mean that we can't take a trade, right? 4-hour shows you areas of interest where we want to look at PD arrays, especially this fair value gap. But then we go down to the smaller time frames to really gauge where we want to actually enter. So if I go down to the 3-minute, and this was around 12:51 noon Eastern Standard Time, what we're going to do is we're going to progress through these candles and see what we came up with, right? So let me go forward. All right, we displaced all the way down. And normally when you see this kind of displacement with these large candles, right, we create bearish fair value gaps right here and displace down even further. That is a sign of a lot of strength. And in this case, there's a lot of strength to the downside, right? So what we want to do is check out to see if we are going to continue down further. And like I said, since we're in this large fair value gap, we want to at least target that consequent encroachment or previous external range liquidity, right? So we have a couple different levels. One right here, this external range liquidity, and then we have a second one down here. But we're all in the context of this large fair value gap. So once we're here, let me go down to the 1 minute. So we can gauge price action a little bit better. I'm going to progress through some more candles. We got more displacement, but you can see based on the volume bar, and this is why the one thing I don't like about some of the ICT traders and concepts is that they don't really focus on volume at all. But I really think volume is very important to really gauge the price action and not just the formation of the candles, because underneath these candles lies a lot of buying activity and selling activity that you can't recognize without looking at the footprint charts or taking into account volume, right? So when we see this candle right here, when we displace down, and you can ignore this 4-hour external range liquidity for now, but when we displace down here, we see there was a lot more buying volume than selling volume in this candle, right? So that's one sign. If all these sellers aggressively sold at these levels, but there were so many passive buyers or even aggressive buyers at this level, all those sellers are not getting rewarded, right? So let's move forward a little bit more. A doji. And see, now we're getting displacement back up, and you can see that the selling volume has been decreasing, but the volume for the buyers has actually been increasing, or at least stayed in the upper range about 2,000. So let me continue. So we are putting right here, when you're looking at it, this is a lower high relative to this candle structure, right? But we still have this fair value gap and a very small fair value gap right here. So there's no trade yet. Now we're starting to see a potential market structure shift, right? This is our most recent lower high. So if we take this out and we close above this, that means we do have a market structure shift. And you can see that we did close above it, and this is on a 1 minute time frame. But we are entering in this entering into this 1 minute bearish fair value gap, right? So this is still no reason to take a trade just because we dipped in, but we are getting above that 4-hour external range liquidity. So right here, if you take a look, right, we did mitigate this whole entire fair value gap. So you can probably think that there might be a inverse fair value gap, which is a very good sign of a reversal, especially when you have a market structure shift as well. So now that I see this, we'll go over to the 3-minute chart, and you can see that we are putting in a bullish fair value gap right here. So if I just draw this right here, we put in a bullish fair value gap. And now that we mitigate this one, this is considered an inverse fair value gap. So what I want to see is price to retrace back into this bullish fair value gap, the inverted one, which is at the same time the same level that we were looking at previously, the 21,098 as the external range liquidity level. So if we can hold this fair value gap as well as hold this level, that would be a very bullish sign, and that would be something that we would look to take long. And so what we did, if we go forward, let me actually go back to the 1 minute chart. Right, we did not get retracement yet. And right here. Right here, we finally entered, and in my Discord, I signaled that I am long here at approximately 1:27 p.m. Right, and this is the same chart that we were just showing, that we got a market structure shift inside this large fair value gap, and we retraced back into this inverse fair value gap. Right, and I said that my target is VWAP, and I will stop out of this trade if we go underneath this fair value gap that we created, that inverse, right? So I entered long, targeting a VWAP. If I take a look at the risk reward from right here, all the way up to VWAP, this is a 7.18 risk to reward trade, which is pretty huge, right? A lot of times we're looking at 2 or 3R, but this is 7.18, so it's really good. So let's continue. We consolidate for a bit, and now we start heading higher. We broke through that most recent higher high relative to the overall trend, right? And we're also creating fair value gaps upwards. So obviously, I trimmed along the way. More bullish action. We're still holding this level, right? Bam. Hit VWAP. Hit the target, hit 300%. So let me go back to the Discord to show you guys all the analysis live, right? I got in for 10 contracts of QQQ 512, right? We can chart NQ the futures and use QQQ, the ETF, to actually place our trades. So this was a 0 DTE, which means it was a same day expiration. Went in with 10 contracts and slowly trimmed along the way. The first trim was at about 50%, I believe. 50% I trimmed, and I took off a majority of my position with only 2 runners left. Kept going, right? This is that same analysis and same charting that we just saw, where we broke inverse that bearish fair value gap, create an inverse, and then we retrace back in to go along. Just got 2 runners, and then eventually we go and hit a 303% trade. So the technical analysis is pretty easy. It really is about being patient and identifying where you want to take trades, which are at higher time frame PD arrays. So 4-hour PD arrays is what I really like, either external range liquidity levels, or we can look at large fair value gaps like this 4-hour one. And it's really find out if liquidity is being swept, and if so, look for signs of a reversal, which we did get through the inverse fair value gap and a market structure shift. So that's a couple boxes all checked off, and then we can just execute the trade. It's not always going to be 100% hit rate, but these are very high quality, high probability trades that we take. And I hit one yesterday for 300%. I'll make another trade recap video either today or tomorrow on the same setup that we got today. Today is the November 13th, but we actually took a short that went to around 200% that I'll record later. So again, if you like this content and if you like this analysis, comment down below if you liked it, like the video, and subscribe. And there's my free socials in the links down in the description below. There's a free Discord that you can join, and then I'll see you on the other side. Peace out, y'all.